I keep hearing about the S&P 500 and Dow Jones on the news, but what do they actually mean for my money?
Great question. A stock market index is just a measuring stick for a group of stocks. It's like a thermometer showing whether the market is hot or cold on any given day.
So can I buy the S&P 500 directly, like buying a stock? Or is it just a number?
You can't buy the index itself. It's not a product. But you can buy funds that track it, like index funds or ETFs. Think of the index as the recipe, and the fund as the cake you bake.
Okay, so what's the difference between the S&P 500, the Dow, and the NASDAQ? They all seem like the same thing.
They're different recipes. The S&P 500 tracks 500 large U.S. companies. The Dow tracks just 30 big companies, weighted by price. The NASDAQ focuses heavily on tech and growth stocks.
Weighted by price? That sounds weird. Does that mean a $500 stock has more power than a $50 stock?
Exactly. In the Dow, a higher-priced stock moves the index more. But the S&P 500 weights by company size, so bigger companies matter more. That's why the S&P is seen as a better market snapshot.
So if I want to know how the whole U.S. economy is doing, which index should I check first?
Most experts say the S&P 500. It covers about 80% of U.S. stock market value. The Dow is more of a historical headline, and the NASDAQ is great for tech trends but not the whole market.
Can you give me a real example of how these indexes move differently on the same day?
Sure. If tech stocks crash, the NASDAQ might drop 2%, but the Dow could fall only 1% because it has fewer tech names. The S&P 500 might land in between. Same day, different stories.
So how do I use these indexes as a beginner investor? Should I just pick one and copy it?
Yes, actually. A simple passive strategy is to buy a low-cost S&P 500 index fund. You get instant diversification across 500 companies without picking individual stocks. It's the foundation many pros recommend.
But what if I want to invest in tech specifically? Should I buy a NASDAQ index fund instead?
You can, but know that you're taking on more risk. NASDAQ funds are more volatile. A better move is to start with the S&P 500 for broad exposure, then add a small slice of tech if you want extra growth.
What's the biggest mistake beginners make when they hear about these indexes on the news?
They panic when the Dow drops 500 points. But remember, the Dow is just 30 stocks. A 500-point drop might be less than 1%. Always check the percentage change, not the point change.
So what's your one actionable tip for someone like me just starting out?
Start with a monthly automatic investment into a broad S&P 500 index fund. Even $50 a month works. Set it and forget it. Over decades, that simple habit beats most active traders. That's the power of passive investing.